ARM Holdings. ARM is the ticker symbol, ARM stock for short. I put on a short position on ARM stock back in March going into April, with April being I was using stock options. And by the skin of my teeth, I pulled off profits within like the last 3 days prior to expiration. I thought I was just going to break even and call it a scratch. But ARM stock itself starting to trend a bit higher again. First and foremost, ARM stock is overpriced. It's the float is incredibly low because Softbank has about 90%. They're holding on to that. They're not going to release those shares probably anytime soon. And the price of ARM stock itself has been driven up artificially. And so when I see pops higher in ARM stock, I'm going to go ahead and short it using what's called a risk reversal, which is a stock options strategy. I'll sell calls and buy puts. Now I have a trade lined up. I haven't pulled the trigger on it yet. I'm kind of hoping that we see some kind of mini rally. We're about 108.5 on ARM stock right now. And I wanted to kind of wait until maybe we cross 110, 112.5, maybe 115 before I pulled the trigger on this. Let me break down the shares or the strategy, the stock option strategy I'm going to use to sell short ARM stock. And what I'll do is I'll also show you the rationale behind it. First and foremost, it's overpriced by a long shot. Number one. Number two, the U.S. economy is starting to contract, and because of that, broadly speaking, the stock market itself is going to sell off. And number three, this is kind of important, AI stocks themselves have been overpriced, pushed higher. Of course, NVIDIA is doing so well with revenue growth, but even NVIDIA stock, NVDA, the symbol there, is overpriced. We're seeing some reluctance for investors to push it up much higher. The broader stock market's going to come down. AI stocks are starting to tumble. ARM stock itself will fall. And I'm going to go ahead and put on another short position using a stock option strategy called a risk reversal. Let's jump in and I'll show you what I'm doing. Here's a thumbnail on the previous trade video that I had. And it was a fairly decent move. And let me show you, this is the chart that I had that I was going off when I first put on the trade. ARM Holdings, ARM stock itself was trading about 125. I sold 150 calls, buying 100 puts. So it was a pretty even, there was a $25 gap in between reference, the 125 price on ARM stock, to the calls. I did not see 150 again, and there was $25 below. And I paid just about exactly what I took in. Selling those calls, I brought in premium. Buying those puts, of course, I had to pay premium. This is called a risk reversal. I always trade with a really wide gap when I do this stock option strategy. Simply put, there's a lot of noise sometimes. I'm usually looking for stocks like ARM stock, which are grossly mispriced, and there are fundamentals that will drive the stock either up or down depending on what I'm looking at. Here, so it was about 125, and my options expired third week of April. And I put that trade on in either February or March. I don't actually remember, but I only had like 2 or 3 days left. And then all of a sudden, ARM stock itself collapsed. And I really wonder if it was because of stock options that the people who take the other side of these trades on a delta neutral basis had to sell into this, and that created a push downward. Push down to about $85. I ended up making about $17.50. Now my 12, I paid a certain amount for the calls. They expired entirely worthless. I sold my puts for a price, and the total between taking in what I received off the calls versus what I received off the puts was about $17.50 for that move. Not bad. I'll tell you, that was a fairly decent move. And here's the breakdown. The options actually expired on the 16th of April. It was a 150 call and 100 put. I paid $10.25, received $10.25 for premium on the calls paid 10.15. I actually thought I was going to walk away with a mere 10 cents and let them just expire worthless, which, hey, 10 cents, I'll take it. Then all of a sudden everything kind of collapsed. Now, this is in hundreds of millions. 2024, you're looking for ARM Holdings is projecting about 393 million. 2025, 419. This doesn't really amount to too terribly much when it comes to earnings per share. And this is where I'm a value investor, and I'm going to ask the question. I'm looking for stocks that are disproportionately valued because the market is just running away, up or down, based on something. And at the same time, I'm an economist. Everything I do is driven by the overall broader economy. If the economy is expanding and I can find a stock that's underappreciated for whatever reason, and the stock market, broadly speaking, is going to go up, but this stock is just sitting there, whatever that stock may have been, I'll go long. That's how I get in. That's my stock trading sort of strategy. At the same time, right now, I believe that the stock market is overpriced and that we will see a contraction. We're going to see growth rates decline, at the very least, to moderate levels. GDP printed 2 weeks ago, a week and a half ago, whatever it was, 5.3%. That's a huge growth rate. If it comes down to 2.5%, that's normalized. And once normalized comes in, the broader stock market wakes up and says, we've pushed stocks too high. There's a sell-off in the stock market, maybe even a mini stock market crash. That's when these are the mechanisms I'm looking for when it comes to my trades. Now, ARM stock itself, when I put this together, was trading at about 104. It's about 108.5. So the ARM yield, now these are the next 4 quarters, not necessarily 2024, $1.55. All right. I'm looking for a target rate at $1.55, reasonable 5% move yield for a value investment. You're looking at about $30 as a reasonable price for ARM stock. Will ARM stock get down to $30? They've got Big Brother, who's probably going to keep pushing it up a little bit higher. If Softbank can, maybe they release a few shares here and there because they know they're sitting on something that's overpriced. But if they did that, this would flood with float, and that could, in fact, push price lower. So it's going to be an interesting play. But here's what I don't see happening. 150 once again. ARM stock is overvalued by a long shot, and I think the big run-up in AI stocks is already done, and from here you'll see rational investing. So what I'm looking at is the 135 21 June call. I can bring in $1.50 on that if I sell the 135 call. Then the 92 half put, I'm paying 158, so I'm going to be out 8 cents. All right. Mid-June, we will have a lot more evidence coming in over the course of the next 5 weeks or so that it's going to tell us that, yeah, the Federal Reserve is going to leave interest rates higher for longer, and this is going to affect economic growth, and the broader stock market will sell off. Because of that, ARM stock follows suit. I may make my 8 cents back. What I'm hoping is that we see a small reference right now is 108.5. Maybe we get up to 112.5 to 117.5, and I can move the call strike price from 135 to say 150 again. I don't see 150 happening at all for a long, long time. So it's going to be a nice ride to the downside, and if I can wait out a little bit more, maybe next week I put this stock option strategy on going into, we get interest rate inflation numbers next week, and I think it's Wednesday. I'll be checking my calendar over the weekend. But this is the strategy I'm going to be looking at. ARM stock goes lower. It may trend a little higher because the memes are pushing Momo and all those kind of interesting words. Awesome. Higher diving board to jump off of, and I'll make that money once again. If this is the kind of breakdown you're looking for investing, make sure to hit that like and follow button. If you're looking for written content on value investing and analysis like that, I've got my Substack link down below. Make sure to hit that. We'll see you in the next video.